Hexicans, yep, this is an exclusive HEX video. So I want to highlight here for you guys something we've been saying for quite an extended period, and that I need to continue to say, and that is we are in a significant change of cycle. We called the top on HEX way up top here at around 51. The break of the 37.5 was our head and shoulder target. My apologies, head and shoulder neckline, and the target was a run through 23 with overperformance expected. You ran all the way down to the HVF method funnel levels that gave you that overperformance. So this was during a very buoyant period for Bitcoin, crypto projects, and all and sundry. Massive overperformance sell here. This we call an HVF slide, and technically you would have stayed short even longer than the target implied. You could have got out over here. Anyway, so this was a top call at 51. The break of the 37.5 over there was an absolute confirmation of a major reversal in trend, So HEX, remember, once you state you're relying on new money coming in to sustain your price. You are not a price maker. That which you paid is an item of data historical. It is an item of data historical. It does not imply value. It implies a transaction that occurred at a certain time, at a certain valuation of dollars at a certain time, and a certain valuation of outlook for a token that was paying a yield at a certain time. It is not a truth. Everybody thinks that the price they paid was a truth, and inevitably you have to go there, and only higher is a further validation of your positive thesis. What you've experienced since then, snapback rally and a major bounce here. Oh, buy the dip. It's always good to buy the dip. You regularly got trained into buy the dip positivities. By the way, that was an HVF target make, natural pullback. Here again, smaller dip, new HVF structure, all confirming a bull period with lots of new projects to come on the go. Also coinciding with a much stronger time in overall crypto, and also coinciding in a less toxic environment for general macro. We are forecasting huge capitulation still to come on the Nasdaq, the indices. This is a bear market like you're not going to see. The people relying on the Fed put are going to find out why he's the most unreliable boyfriend in the world. He has got a whole palaver and slop in his doggy dish to eat, and he ain't showing up for his date with you and the put options. And that is a different level of systemic failure that is going to do a real harsh rinse on all crypto. This is not a explicit, this is not a, oh, spoil Hexicans bad day, rattle people's cages just to piss them off and get a whole bunch of hate comments in, the thing. I'm not a clickbaiter. I'm not here to ruin people. Richard helped me understand things that I didn't understand, and I'm grateful to him for that. So it's quite sad to actually just call it truism on a particular crypto which is in a bear state, but I would suggest less conspicuous consumption, more empathy, because people are going to get mad and they're going to blame the founder, they're going to blame other people, they're going to blame him, they're going to blame various things. People always want to escape act. It's never themselves when they got it. The problem that Hexicans have is they've been deeply ingrained with do not trade. Do not trade. So inherently I am coming forth like a trader, and I was wrecked and I didn't make as much money on the upside. Actually, I held for an extended period while it was in a bull market. I did short stakes, so in terms of what I did get engaged, but I was always keeping arm's length and ready to run, on the basis that I never fully bought into anything. That's not a judgment on Hex or Richard, it's per se, it's my overall dispassionate approach to all assets. What loves you one day hates you the next, and things turn. Always turn. It's kind of like marry your girlfriend and make her your wife. Don't marry investment vehicles and asset classes and any particular thing. And the more you make money out of it, the more people are in a married state. this is a cycle turn for crypto generally, and specifically here, this micro head and shoulders, which looks pretty small now when you're looking at on this time frame. What time frame are we? We're on the daily. Since the original foundational HVF, where we were very lucky to get in at sub 8/10 of a cent, we were accumulating here, and that was my journey. I made money. I'm truly grateful for that. Thank you. But guys, this is an absolute throwdown coming out of a broadening structure after you had shown that you are likely to invalidate and run funnels to the downside. This is technical HVF method. You ran a bunch of stops there. You didn't run those stops because you'd already made the profits on these upsides, but this is what we call an invalidation of a previous seam of support that was made during a bull market that now no longer holds as the market is turned. It is the clearest turning signal. Of course you get rallies. We gave further sell signals back at once you rallied up to 35 after this round turn. We said that's a secular turn. We gave further, you ran the lows of the falling wedge, warnings that you're likely to run here. You could have got out at these levels. That was around 13 cents, and on this rally that this was a broadening structure and that it was implying increased volatility. Don't forget, additional tokens were being offered, new sacrifices were being made by people. All of these things were happening. So what is now happening? You've broken and run that funnel. You've broken and run that funnel over here at this point, these points here, and then it was smashed through. So the indication is you will rally normally after breaking an HVF method funnel, but you will return to smash through to the next lower level. Broke it, rally, return to smash through it. Look at that 1 day wick, awful. Wind up, I'll drop the time frame just to show the bear market, and then smash down to the next funnel. You actually got a small amount of resistance on the next one, and then you ran this one. That super spike sell-off was the second. This was HVF2. This was the original foundational upside structure. That's 3 and a cranky 4 with a final blow off over performance. Always a melt up to blow off over performance. So many people feeling so rich at 51 cents that had bought sub a cent, sub a fraction of a cent. And that was a great time. Unfortunately, like all tails, it needs new money to come in. Where do you think the new money is going to come in? When everyone is being devastated, inflation is destroying them, the stock markets are going to crash so much further. I will be releasing a NASDAQ, beautiful charts, by the way, if you love charts, and why it's going so much lower down from where it is right now. Where is that Hunter dude with his 60% melt up story in 5 months? Or a whole bunch more. Watch the Market Sniper, go and watch it. Join our community to know when to hold something and when to let it go. The notion that returning to what I was saying is that Hexicans were trained to hodl forever, and that every 80% dip was just a mega buying opportunity till the next one on what is a highly volatile beta asset class that you are being encouraged to drip feed ongoing new fiat on an ever ongoing basis, on the basis that that will sustain price at a certain mark to market value. The minute any significant volume is introduced, especially if people are purchasing a lot of Louis Vuitton products, Ferraris, etc., volume has to be slowly distributed and gains made, and you are an investment in an asset class where the biggest holder can technically sell into the market, and also will be seeing market views and will not want to see his holdings wash out and may be tempted to take some profits. I'm not implying that this is Richard dumping. I'm just saying at some point all the funds, all the bling is being paid for. Where are the proceeds coming through the project that he's dedicating the bulk of his time to? So this is bearish, guys. You ran that, you've run that, and you ran this, and we said when you rallied here you would rally to the next funnel level. We've been saying this on Crypto Sniper. You should be following us, and that you'd run to the next level, and that's exactly what has occurred. You ran this and you ran back up. Resistance caught between two funnels. When this was a spike down, we said, guys, you're going to get hit. You're going to get hit with this being run again for the new low, and you will then be looking for the next funnel level, which was the origin upside HVF funnel levels, which is why I've continued to say, even though it feels like you're losing out here at 5 cents and you could have got out 10 times higher, you can still lose a whole bunch more. You think it's cheap now, it can get cheaper still. The next funnel plunge on a major tech route will take you through the 1.1 cents level and the 8 not even 8/10 of a cent, and I expect this red line to be run as a final signal of an entire round trip of what's gone on in this token. This current structure is very much in the form of disproportionate inverted HVF. That doesn't mean it can't rally a tiny bit in times, but this is not bottoming structure. We assert and call that a basing ascending grind line, where there's a deep lean to the low side at this level. The bulk, if you do volume by price, which I'm not sure how much you're going to get, I'm not too sure how much volume we've actually been getting out of HEX. And I have guys that say, oh, you're not a serious technical analyst, you don't have volume on. This is the volume you want, volume by price. I do histogram volume separately, but price behavior is king. See, I'm not really getting anything on the volume data. Some of you might tell me which I'm on the wrong Uniswap version or whatever. So I've not got a volume basis to give you, but my assessment will be you are leaning here. Initially, you're very top heavy there, but then it came back down, and all of this collective volume is sub this funnel. You bounced in between these two. This was your stall box for a short period. There's a little squeezy, and again you spilt under. Now this funnel is resistance. So you were in an entrapment zone between two funnels. Now this funnel, there you see that, is resistance. Once you've broken it and you've gone below, rallies back up into it and resistance. This is a seam of resistance where previously it was a seam of support. This is classic traditional technical analysis. I do not assess that you will trade above 6.4 cents. Could be wrong, but that's not meaningful move anyway. The long term and the next fall, where are the key levels where you will bounce on the way long? Well, 2 cents, which was a legacy target of the foundational original HVF1 on this investment vehicle, if I can call it that, that I was engaged in from the get-go. That target was run. We held on. It was 2.1 cent. You got in under a cent. It was still a good trade, and down. I expect that you think that you've had your worst spill, and there's worse to come. And it's going to be led by macroeconomic events. It might also be led by something structural with HEX. This is currently the only trading version. The release of Pulse Chain has been delayed, and Pulse X, a lot of money was collected on sacrifices, and in this period you are watching a devastation. I hope those funds are going to be utilized and see the tokens materialize, and that the dev project comes out. I think it's important for some good news to come out. But guys, waiting to be in the snapshot from 51 cents now down to sub 4.7 cents, we're looking at it, to get a snapshot where this will fall further in value as people would move onto a Pulse chain, doubling the amounts of markets that have to be held up as people stake. Stakers do not hold price up. New money does, and lesser money selling. All stakers do is not be a seller once they've bought. You need fresh money to hold that price up there, and this is what you're finding. You're going into a major recession on an interest rate hike. This token will fall further. This was a speculative vehicle. It was a high risk vehicle. Many people have tied their future and their faith. My predictions is there will be many angry people, damned, that will be cursing, and then there will be a lot of told you so's that said it was a scam. It's less of a scam and more about economics. The cycle is over for easy money. You can't hold the price up if there's not new money coming in. Nobody's going to want to use their own funds to hold up their own projects' money. They might be more comfortable with it coming off. This is a really dangerous time. You will go from, we said 5 cents to 8/10 of a cent. That will represent another 80% devastation of the actual value. As I've said, we cleared out of HEX a long time ago, and I hope for the best on that which was sacrificed on the Pulse. We did very well because we got out. You were trained and told that you should forever be a hodler. You will be trained and told what best serves the project, not necessarily what best serves you. The reason we have stop losses, the reason why we trade charts, the reason why we call tops, and it's ironic sometimes when someone is claiming the top call on Bitcoin at 64k, that doing the same on his token is not a smart move. Technical analysis is very useful. It does show you when key levels and reversals have taken place, and it does save you a bundle of cash. Imagine you got out at 51 cents on HEX instead of 5 cents. Imagine you get out at 5 cents instead of 1/5 of a cent. That is still 10 times more than what you will end up at the end. Do you really want to be the last guy left in the room on a downside cycle? Even if everything goes well with the development and the release of the projects that will be coming out, what do you think will happen to the Ethereum version, given that stakers are not the ones affecting price? New money in would be. This is not going to be, this is the almost stage one part of the rocket ship getting to the moon. It is released once the fuel is done, and you're relying on new vehicles to continue the journey, and the other one falls away to waste. This is the problem that HEX faces, and as at the moment there is no more, plus you've got a major macroeconomic cycle turning. This is a big problem, and my next expectation is the next great big spill will take you through the 2 cent, will take you through the second interim of that foundational HVF, that's the smaller purple line, will take you into the funnel zone before you will get some degree of support, and you'll quite likely run that value, which is less than a cent. It's less than 0.8 of a cent, and that will mean you have experienced for yourself incoming inflows of money that has seen a market move up in a bullish environment where people continued to make money and momentum was continued to be built into a cycle where the new money coming in is no longer sufficient. And the warning started with the Pulse X and the Pulse sacrifices that led to failures to make new highs on HEX, when most of the people woulda, shoulda, probably were sacrificing HEX and reducing the overall flow in terms of it at that time. And as a result, this has been a failure to create new upside momentum as a result of these projects, and is indicating that this is exceedingly bearish, guys. Exceedingly bearish. So whatever you have now, you have an opportunity to save hey, I know if you've staked it long term for 5 because you went all in, it's not going to be cheap to get back out. But that's the system, and those are the terms you sign when you got in. You can't cry foul there. That is why short time frame staking and rolling, as long as you are happy, and the cycle in terms of the strategy I elected to do was, to me, feels like in this environment the safest thing to have done. We avoided all the mega long-term stakes. Okay, that's my update on HEX. Unfortunately, macro events are coming. The tide will wash out, and if there's no new capital, this will not be held up well. Thanks for watching. Give us a share and like. Sorry if it's bad news. I'm not here to provoke you. I'm not here to ruin your day. I'm not here to upset you. This is my take and my opinion. It is non-financial advisory. I can, of course, be utterly wrong, but we called the top at 51 cents. We called this head and shoulder, and the short and the get out at 37.5, and the repeated rallies thereafter. This is not a good time to be in high beta speculative assets of any class. This is not a personal attack on anyone. Okay, catch you next time. Thanks for watching.